I think what we have to be certain of is that the slump we had in commodity prices for the past 2 years has not been driven by a recession. It's been driven by too much supply, and supply adjusts when prices come down, and that process has been very painful. Whether we needed a final sharp move to the downside really in order to speed up that process is probably what some investors were looking for before they want to get back in again. But no doubt that we've seen the supply start to adjust to these lower prices. Which one will bounce first? Well, oil is tangibly starting to bounce now. You can argue that supply is still a problem, but when you start looking at the signs that will bring us towards a stabilization, we are seeing those signs already. U.S. production has now been falling for the past 6 weeks. That is something the market is really focusing quite keenly on. And again, energy is what runs the world, and this is really the biggest input to many economies that we've seen for many years, and it will have an impact on demand for oil. So oil demand growth will continue over the coming years. So it's just it's a question of time before demand picks up or overtakes supply again, and that will happen within the next 18 to 24 months. So on that basis, a lot of investors are starting to dip their toes into the energy markets and have been doing that now for the past few months. It has surprised, but then again, when you look at that's because some of the commodity markets has surprised here at the beginning of the year. On the assumption that we've probably seen the worst, and we see now with China again, I think we have priced in almost a worst case scenario in China. They are looking to continue to do their best to stabilize the economy. Demand has not fallen, but it just has stopped rising. So the Australian dollar is again, if the world is starting to look for more tangible assets in a negative interest rate environment, then obviously that will indirectly benefit Australia, especially considering your economy, which is so heavily dependent on commodities and the housing sector. And what you don't need right now is obviously a big spike in interest rates, and it doesn't look like that's going to happen anytime soon. Even though if this move continue, and we start to see the recovery in the metals market continue, then obviously the RBA may have to look at rate hikes instead of rate cuts, which is obviously not on the cards at the moment.
By the end of the year, oil will be trading higher or lower?
Oil will be higher.
Okay, iron ore?
Iron ore will be flat.
Gold?
Gold will be. That's a good one, because I was looking for 1250. I thought I was very positive at the beginning of the year. Now we're trading close to 1300. I think we'll be around this level here.
Okay, great. Thanks for your time.
Thank you.